All right, what is going on, everybody? Hope you guys are having the best of your entire life. My name is Ramesh, and I am about to break down how I made $13,330. I have about 6 points written in front of me that I took from my journaling, and I'm about to break this down so you can do the same as well. Make sure you watch till the end because it's really, really, really one of those videos that you really don't want to take. Don't want to watch the video just by itself. All right, you want to make sure you have a pen and paper so you can learn how to actually do this on your own when you're trading by yourself. Now, if you do not know me, I run this channel because I really want everybody to kind of do well. I struggled for first 14 months in trading, and 15th month was a green month, and I know how bad it hurts. It doesn't just hurt you financially, it hurts you physically, mentally, spiritually, emotionally, in every single freaking way possible when you're actually going through a phase where nothing is working for you. So let me break it down so I can make the journey a little bit more easier for you so you can go out there and make some money as well. All right, let's do this. Yo, I've been trading 7 years. I think I know what I'm talking about now, or I'm still learning along the journey, but let's make your journey a little bit easier. All right, let's get to it, yo. Let me break this down. So the first things first that I want to break down for the strategy, or just like in general, I use 3 different time frames for the day, and I don't believe that anybody should use one time frame for the whole day. So if you have already watched some of my videos, this stuff you already know. But if this is the first time you're watching this, so you need to watch 2-minute chart, 5-minute, or I watch this. Well, you don't have to. You can do whatever you want. I like 2-minute chart, 5-minute chart, and 10-minute chart. Okay, so first 2-minute chart, I watch for the first 30 minutes of the market open. That means 9:30 Eastern time to 10 o'clock. I'm watching first 30-minute chart. 5-minute chart, I watch next 60 minutes. That means 10 to 11 Eastern time. And then 10-minute charts for pretty much whole day, rest of the day. Okay. Now, a lot of people think, 10 minutes, isn't that too long to actually date? No, that's not. Actually, it's not. Because I don't like too many candlesticks on the chart. More candlesticks it is, more choice you have to take a trade. And when you have a more choice, it's really very hard to kind of, take a trade, because now you're like, oh my God, this looks like this, but this looks like this, but this looks like this. So you kind of confuse yourself to a point where it just doesn't work out. All right. So these are the time frames, and the reason why I do not just use one single time frame on the day, like 2-minute chart whole day, is just it gives you so many candlesticks. I don't want to deal with it. I'll watch 2-minute chart for 30 minutes, 5-minute chart, then 10 to 11, and 10-minute chart for pretty much the rest of the day. Okay, these are the time frames. Now let's get to the first trade of the day. And also, as soon as I take the first trade of the day, man, I'm one of those day traders that I personally do not like when I'm taking the first trade of the day. I've realized with my trading, if my first trade of the day is red, like if it's red, I somehow walk away. There are big chances that I walk away red on the day. But if my first trade is green, now, do you want to call it, Samesh, you don't know how to trade? I don't know, bro. It's just like me being self-aware of myself. If my first trade is red, I walk away red on the day. If my first trade is green, I walk away big time green on the day. So when I'm taking my first trade, I'm always taking with a small position size, because it pretty much tells me if I'm going to be red or green on the day, right? If I am red on the first trade, I don't want to lose 5,000, because it's very hard to come back from a 5,000. If I'm down, like, let's say $100, it's easier for me to come back from minus $100 than coming back from minus 5,000. Okay, that's why my first trade of the day is always super small position size. Sometimes even just like 2 contracts, even 5 contracts or whatever. For me, the big position size sometimes is like 100 contracts, 200 contracts on SPY. Sometimes when I'm like really in the zone, my position size can go from, I'll add 50, 50, 50, 50, 50, can get to 400 contracts for people who are like, how many contracts do you do? It's all about, I've been trading for a long time. So should you do 400 contracts when you're starting out? No. I've just been trading for a long time, all right? So first trade of the day, always with a small position size, just because I don't want to be big time red, because that wrecks up the whole day, okay? And if my first trade is green, man, I'm in the zone now. I'm like, sweet, this is it. All right, it's called self-awareness. All right, so let's see what's happening. If you see Tesla, this was Tesla's chart. We kind of played around this too. And also we were coming back from the robotic taxi event, the robo-taxi something event that Tesla had, and we gapped down big time that particular day, and we kind of stayed choppy after that gap down. But now we were gapping up a little bit. Like a small gap up, not heavy, but it was still decent gap up from 218 to all the way up to like 220 to something. Couple dollars. Now, as soon as the market opened, We had a pre-market low. Always mark the pre-market lows on your chart. It's the important levels. Okay, this is the pre-market low, and okay, this is a pre-market low. The moment we broke below the pre-market low, the candle was able to close below. I just know I watch pre-market highs and lows like a hawk. If a price is able to break above pre-market low, close, the candle is able to close above 2 minute, 5 minute, whatever time frame I'm on for that minute. If it's able to close above, I'm usually like a little bit biased towards that particular direction. If it breaks towards the downside, I'm biased towards the downside. Now that means I can play puts and make some money. But I'm a sort of trader, like I said, impulse, pullback, and impulse. That means if there's an impulse, what does impulse means? One big move. Then look for the next P. What is P? P means pullback. Look for the next P, have a little pullback. And then we can get back to original direction as impulse. Now, where does the P can come back to? It can come back to the Fibonacci levels. It can come back to 8 exponential moving average levels. Some sort of level where we have, like, it can come down to previous low of the day, some sort of levels or pre-market low. Basically, it comes back to some sort of a critical level, and then you can take a trade towards there with a stop loss on the other side of that critical level where we're, like, basically, I mean, is you need to look for a confluence. If there's a confluence means more than one reason for you to jump into a trade. One is a pullback, other one is a retest of a critical level. That can really work. Stop loss is just on the other side. The whole point is keep your stop losses small and your rewards automatically become bigger. Okay, now we clearly know that we closed below the pre-market low. Now I'm like, okay, let's see if we get a little pullback, right? And then we started seeing a tiny bit of a pullback. Like, look at this. Price is slowed down a little bit. Still not a pullback. Let's see. Because there's no confluence. Okay, now we got a little, pullback up to previous low of the day. This is the previous low of the day. You see this? This is the previous low. Pull back to, but that doesn't mean for me to just jump in straight away without looking for any sort of confirmation. No, I'm still waiting. And then it pulled back a little bit more. Now, if you think about it, we pulled back to 8 exponential moving average. It pulled back to this EMA or this previous low of the day. And if you wanted the settings for this EMA that I have, these are the settings that I have. Okay, EMA, this. And you can pretty much go to the indicators tab right here and you can search EMA and it says moving average exponential, and you can click it and then put these settings. So now you have all the settings that I use. All right, sweet. Now I pulled back to this. I'm like, okay, one reason for me to jump into this trade is it went back and retested this ATMA. Second reason that I have is it almost went and retested this low of the day, just off by like 10 cents. Okay, we can just say pre-market low. And the third reason for me to jump into this trade is previous low of the day getting retested. We got rejected once, we got getting rejected again. Like the price is trying to break above, but the sellers are like, uh-oh, where are you going? And they push the price down. So I'm just like, okay, this is previous day low, right? And now I jumped into puts right here. Now, where's my profit target though? My profit target's this next yellow line. Where do these yellow lines come from? Hourly levels. Okay, these are hourly levels. Like I go on an hourly chart and I draw my levels, and just that simple. Okay, and that's it. Literally, that was the first trade. First trade of the day. I look for, wait. Finally find the play. Now I waited for like 10 minutes in this case, but sometimes for my first trade of the day, I can wait an hour. Like this is because a lot of people don't realize this, bro. You have 6.5 hours to take trades on the day, but why do you try to take a trade within first 5 minutes and then lose all the money? No, you have 6.5 hours to take 1 or 2 good trades on the day. That's all you need in order to quit your job. I'm a full-time day trader, and I can tell you, that's all you need. And I got this decent trade. I jumped in puts. It hit my critical level. I jumped out. That was my first trade. First trade is always small scalps here. Like literally first trade of the day. I'm looking for, as I said, I'm looking for just like being green on the day is my goal. My goal is not like, oh, let me make all the money in the world. No, being green on the trade is the goal. So as soon as I jumped in, price made a decent move down. This is like over $1 move down. I'm just like, oh my God, this is so nice. Thank you so much. I got the green trade, and the first trade is green. I'm out. It hit my profit target. I'm out. I don't sit there and wait for emotions or nothing. First trade of the day is green. Sweet. Now you got the entry and everything's good. Now then I took the second trade on the day on SPY. Let's have a look on SPY. All right. SPY was pretty much, while I was in the same trade on this QQQs, pretty much it was almost at the same time I took the trade on SPY as well. The reason why it broke above this is the pre-market high. Look at this, yo. This is the pre-market high. Where's the pre-market high? This is the pre-market high right here. Let's draw the pre-market high really quick. Price was able to close above pre-market high. Yes. We're still going. Yes. What are we waiting for? We're waiting for some sort of confluence, some sort of a pullback, some sort of, remember what I broke down before? Impulse, pullback, and impulse. But we also need to wait for some sort of confluence. Like, give us a reason to jump into a trade, yo. That's what I'm looking for. Give me a little reason to jump into a trade, right? Confluence. And ATMA can be Fibonacci, can be whatever. So I'm still waiting. I'm like, sweet, let's wait. And the price, we're still waiting. There's no reason to jump into a trade yet. And then we started seeing a little pullback. I'm like, okay, this is some good stuff, yo. This is some good stuff. We almost are touching the 8 exponential moving average. Now you can't be like, looking at exact dot numbers. Bro, this is like 3 cents apart. You can't look at exact dot numbers because EMA, by the time the candle is still closing, it's still moving because it's still like shaking like this. By the time the candle closes, that's when it actually closes. If the candles are moving wild, EMA is kind of going like this. It's like a moving lever. So you can't look for exact number, never. Just like a few cents apart, like you can jump in pretty much 10 cents off. That does the job as well. But now what I'm looking at is close above the pre-market high. Decent move. Price getting rejected off the hourly level that I had. Sweet, which is cool. Price getting rejected. That's good. Why? Now you know that some people took some profits, and they're going to be more people like me who are going to be jumping in. And when there's more people like me who are jumping in, buying pressure increases. And when the buying pressure increases, what happens? Stocks can literally skyrocket. All right. And pretty much this is exactly because of the 8 exponential moving average retest. And also I drew the Fibonacci. So what you need to do is you go on the left hand side. And now you might be like, but when do you draw Fibonacci? You draw Fibonacci like this. So you go to the Fibonacci, place it from the low of the day to the high of the day right now. Look at this. And now it came, I'm like, okay, this is 8 exponential moving average right here. This is the area that I like, 0.236, 0.382. I'll show you my settings of the Fibonacci in a minute. And I'm like, okay, this looks good. I have a confluence, one test of EMAs, 8 exponential moving average, second test of Fibonacci levels, and third is literally just broke above the pre-market high and finally given me a pullback. I'm about to jump in. Let's see, stop loss can be just on the other side. I'm risking basically like few 20 cents or whatever. And now I'm in the trade. I'm in calls. Stop loss just literally below this. I'm in calls. Now, the next point that I kind of have is you find a winner. Like I found this winner. Okay, it's working beautiful. It started pushing towards the upside, whatever, right? The trade's moving, working fine. And my next profit target, I believe, because it was all-time highs. Yes, it was all-time high. Like SPY never traded around here ever before. And when something's not trading around a critical level, like we haven't traded ever around that price, every $1 move, write this down, yo. When we are at all-time highs, every $1 move becomes a critical level, because you got to think of like psychologically, people who are sitting on the other side of the world who are actually buying so much that they're moving the market, they're not going out there and be like, oh, I'll take profits at 582.71. Now they're like, man, I don't know where you're going to stop. All right, I'll take some profits at 583. I'll take some profits at 584. That's how they're thinking. And you need to be aware of that. All right. Nobody looks for exact point ones and stuff. All right. It's all-time highs. That means there's no critical resistance. Next level can be 583. That means if you think about it, I risked pretty much like this is my risk. This is my trade. I'm risking 20 cents to potentially make $1.20. Beautiful freaking risk, right? I'm in the trade. Sweet. Let's see. And the trade made this huge move to 583. I'm like, oh my God. Oh my God. Let's see if we get a little pullback. Now you got to understand, bro. Once you see a stock move like this, once you see something happening like that good, you see what I'm saying? But you told yourself that you're going to take some profits at this 583. Please take some profits, especially after a big move, because this paid very, very heavy. Really heavy. Like it's a $2, more than two, like we entered early, more than $1 move. This is a big move. You got to take profits. You see what I'm saying? Anyway, we took some profits. 583 was approaching. I took some profits. I'm like, okay, no problem. Let's see if it gives me another entry to jump in. It went up a little bit, but started, getting a little rejected. It came down. Now, to you, it might be like, yeah, but bro, why would you jump in here? Now I'm put the Fibonacci from the bottom to the top. I'm like, okay, it's still holding this 0.236. Everything's looking good. 8 exponential moving average is sitting few cents off. And the next, I'll be honest with you, by the time the next candle opened, the next candle started moving up. 8 exponential moving average was literally sitting right here. Like you will see when as soon as you jump to the next candle, you'll see 8 exponential moving average was sitting roughly here towards this Fibonacci level. So I was like, ooh, there's a reason for me to jump in because there's a confluence of Fibonacci at the bottom, and we have 8 exponential moving average. Think of it like a rubber band. I don't have a rubber band nearby, but maybe I can use. Oh man, I wouldn't really break this concept down for you. I don't have anything that I can use. Oh, maybe this. Nah, this cable is too short. Oh, maybe my Apple Watch charger. All right, think about this like this. It's the market's like this. It's a rubber band. So the rubber band's at the bottom. As soon as the prices are coming towards it, rubber band stretches and then it bang. Look at this. You see, it makes a decent move towards the upside. It's called, I like to call it elastic concept. All right, elastic concept, because it's just like elastic, bam, it flies. So that's why the confluences work so well. Now, because I promised you I'll give you settings for my Fibonacci's, these are my settings for Fibonacci's. Please make sure your Fibonacci's are exactly the same. Take screenshots because I've used a lot of Fibonacci's and I like 0.236 and 0.382. Some people say, oh, 0.618 is the golden ratio because they learned it in a freaking book written by somebody who fucking doesn't know how to trade. No, if you're a day trader, if you're a day trader, you can't wait for 0.6. Bro, you're waiting for that much of a pullback. What doesn't tell you that the downtrend has started? And now you're going to come here and you're going to buy calls. That's why you're broke. Because you don't know how to trade. All right. No, I like to see when the prices are holding either 0.236 or 0.382. When the prices are holding in this box, that's my favorite box. All right. That's my favorite box. So let's see how it happens, how it goes. I jumped in the trade the moment this get taken over. I was like, oh, this is the last stick sitting right at the bottom. I jumped in. I'm like, oh, let me do some calls because I took some profits before. I'm like, sweet, let me do some calls. Let's see what happens. Let's see if we break, if we make a new high of the day. And then it did make a new high of the day. Look at that. And this was the time exactly. Look at this decent move up. Right, it's a decent move up, 582.6 to 583.47, 80 cent move up. Beautiful. Now, what I'm doing here is I am going on a 5-minute chart. Why? Because 10 o'clock hit. So now on a 2-minute chart, I have nailed this trade. And this is the point that I have for you is find a winner. Keep betting on that winner. Like the hardest thing to do is finding which is a winner. Like we clearly can tell this is a winner on the day. It made very decent, nice moves. We can clearly tell. But a lot of people do, they take a small move and they're like, oh, nobody goes broke taking profits. But bro, nobody gets rich taking small fucking profits. Wait, you want to trade full time and now you make $30 and you're like going to your wife, hey, I'm going to quit my job. And she's like, oh, how much money did you make? Oh, $34. Think about how the conversation going to go. You need to let your runners run. Also, if you find a winner, you need to find a way how you can keep betting on that winner. So the hardest thing to do is to find the stock or to find the trendy day. And once the trend is there, and now you're just like, oh, I'm happy with my $30 because you read somewhere or somebody told you who doesn't know how to trade, oh, nobody goes broke taking profits. Bro, nobody gets rich taking profits. Did they tell you that? Nobody gets rich taking small profits, $30. You gotta let your runners run. That's my style, man. I like to do no BS. If you don't like it, maybe you shouldn't be on my channel. I like to do no BS. I'm very straightforward. If you want to make money, this is what you need to follow. If you don't want to make money, just follow whatever. There's plenty of freaking strategies out there. But if you're on this channel, the universe wants you to succeed, and I just want to give you the sauce. All right. Okay. So now I'm jumping on a 5-minute chart. Let's see what's happening on a 5-minute chart. Now, what's happening on a 5-minute chart? Are we getting any pullback yet? To me, that's like, yeah, sweet. I'm still sitting in a trade. I'm looking for an entry, or I'm looking for a reason to jump into the trade, right? I'm not just going to go out there and jump in a trade without any reason. That's me as a trader. I'm still looking for a reason. I still have my trades that I have, that I'm still holding. And let's see. Give me a little pullback. Sweet. Sweet. Everything looks decent now. This is the Fibonacci point right here. It's holding the Fibonacci. Everything's looking good. right? Holding the Fibonacci's, let's see, 8 exponential moving average. Okay, 8 exponential moving averages here, Fibonacci's here. Everything looks good, right? Again, we've got a confluence of previous intraday level. We got Fibonacci right here. We got 8 exponential moving average right here. Bro, how many more confluences do you need? You have Fibonacci, you have 8 exponential moving average, you have intraday levels, you have all the reason to jump into a trade. Now what you need to do is just jump in, yo. Right? And now where's my profit target? You can do high of the day, you can do profit target of like maybe high of the day better because it's a little bit later on in the day now, whatever. And it went. Look at that. Like once you find a winner, man, you need to just stay in that winner. That's what I'll say, literally. Okay, this was a SPY trade, and along the journey, of course, I took a few trades. Like these are 5-minute candles, man. When this is happening, like I'll break this down as well. So the first point that I broke down was time frames. Okay, you got the time frames, yes. Second point that I broke was first trade of the day. You got to be a little bit taking it easy on the first trade of the day. Third was impulse pullback and impulse. Okay, fourth point that I made was once you find a winner, just keep betting on the winner. And now the fifth point I'm about to break is catching these plays is easy. Waiting for these plays is hard. Catching these plays is easy. Like it's easy. I'm showing you. But actually waiting for them to show up, sometimes they don't show up for 3 days. But waiting for them to show up that's where the money is. Right? I wrote down this point for you. What you do when you're not write this down. What you do when you're not in a trade is what is going to make you the profitable day trader. All right. What you do when you're in a trade not going to make you money. Like whatever. But what you do when you're not in a trade, are you looking to find a play? Are you just like waiting for the play to show up? What you do when you're not in a trade will become the reason for you to become a profitable day trader, because you will not do any dumb shit in the market and you will be able to make the money. Okay. So the sixth point that I had was when you're not sitting in a trade, do something else. Yo, literally do something else. Watch a show, watch a TV show, do whatever. Set your alerts, watch a show. Just take it easy, yo. Don't sit that close to the desk and you're like, oh, let me look for a play. No, that's not how you make money. All right. Now, this is SPY. I made a lot of money on this SPY. I actually, from all my entries, I'm just going to keep it real with y'all. Initially, I think I took like 20, 30 contracts, whatever. I added, maybe I actually kept adding as soon as we broke a high of the day. I added more. Like when it's winning, man, I don't mind. I'll just keep it real. When the trade's working, I don't mind. I want to keep adding to that. I kept adding and adding. At one stage, I think I had I'm not gonna just bullshit sit here be like, oh, look at me. This was an 80 or 100% trade, or 80 maybe 100%. Yeah, actually 100% trade. I think at one stage I had like, I don't even remember now, maybe 80 to 100 contracts. Oh, maybe a little more. But that doesn't mean you shouldn't be watching this video because I'm doing big position size, bro. Even if you did 10 contracts and that position size was 2,000, even if you did 5 contracts, that position size was $1,000. Even if you did 3 contracts, that position size was 600. Catching 100% trade means you double your money. Literally, you double your money. Like that 2,000 become 4,000. Now you made $2,000 in profit. You made $1,000 in profit. You made $600 in profit. Would your life will be a little bit better if you know how to make a $600 in a day? I think so. All right. So, okay. Next was QQQs, but now it's pretty much the same concepts that I used whole day over and over and over and over and over and over again. I waited for the trade to show up. This is exactly where I caught this move, like bang. This was QQQs while I was in SPY. I was just like, oh, this looks good as well. I jumped in the moment it broke this little flag pattern we started seeing. Once a trade is working, man, I'm just like, once I see the market a little bit clear, I'm just like keeping it super simple. I'm like, oh, this looks good. And these are my charts, how my charts look. I'm watching these many charts at the same time. I'm like really quickly just going over and be like, oh, yeah, this looks good. Let me just trade that. Oh, this looks good. Let me just trade this. That's how I trade. I watch 12 or 10 charts at the same time. These are all the charts that I watch. See what I'm saying? big move towards the upside, and this was my critical level. What my stop loss? Like, think about it. What's my stop loss here? This is my entry. Stop loss is literally on this side. This is my profit target. I'm risking 12 or 15 cents to make 60 cents. What is this? Every $1 that I'm putting in becoming $5. That's how I trade, just like quick move. Sometimes I let my runners run, but depends on how far my hourly levels are. This is QQQs, and then Nvidia. I lost some money on Nvidia. I'll show you my losing trade as well. Otherwise, people say, "Oh, you never break down your losing trades." I do, bro. It's just like I only trade when actually market's looking good. All right, this was my trade that I took on Nvidia. The reason why I took this trade was it kind of was like looking good. To me, it was like, it's kind of making this little flag. Let's see if it actually breaks out, and I'll jump in. We already have a decent trend on the day, and I drew my Fibonacci's. I'm like, it's holding it's holding above the box that I like to see. And let's see how it goes. If it breaks above this critical level, that was a bet that I had. If it breaks above this critical level, it might go up to the next critical level because we are sitting so close to the critical level at this stage. I jumped in the moment this flag broke out. I jumped in here, but I jumped in calls. It got rejected off the critical level, the hourly level that I had, and I had this hourly level drawn in the pre-market. Okay, now you're gonna be like, yeah, I'm just talking crap. No, I'm not actually, because with my students, I share my charts and stuff every day. You can have a look right here. What's this level? 139.5. You can have a look. 139.5 right here. You see this? I draw these levels exactly the same level, Joe. I shared my levels with them, so they can kind of use the same levels as well. And it got rejected off the level. And I'm like, whatever. My stop loss is just on the other side of this flag. So whatever. I lost like 13% on this, but that was a losing trade. Would I do anything different? No. It was a beautiful trade that I took. It just ended up not working. Does that mean that I don't know how to trade? Of course not. I've been using the same stuff all day and I was making money. So it's just like, you take it easy, is what it is, and relax. That makes sense? All right. Microsoft was the last trade. Really, this was a quick trade. Same. It was a quick trade, and I took the trade, and I was like, all right, let's see. Pretty much the same concept. Prices were like, actually, this is something important. I went on an hourly chart in the pre-market. What happened was, on an hourly chart, we were breaking out of this huge trend line in the pre-market. We broke above this, so I was like looking forward. I'm like, okay, we can make a decent move towards the upside. We broke out of this huge trend line in the pre-market, and it did make a decent move. But I'm a sort of trader that after an impulse, I'm waiting for a pullback, and finally I got a pullback. You see what I'm saying? And as I said, man, I'm simple. I keep things super simple. We were making a little flag. I was like, let me just check the Fibonacci's. It's still holding my box. It kind of was holding my Fibonacci 0.236, has 8 exponential moving average. There's multiple reasons for me to jump into a trade. What's the first reason? 8 exponential moving average. What's the second reason? We have a flag sitting here. What was the third reason? We have Fibonacci level sitting here. What's the fourth reason? We are literally getting rejected off the hourly level that I had. And if it breaks above the hourly level, you're going to go hit my next profit targets. That's like, I'm like, okay, this looks good. There's so many reasons for me to jump into this trade while I know what's my stop loss just on the other side. So I know my stop loss. I've been big time green on the day. I'm like, okay, I'll take it. And I took this, and this other trade went. I made a decent move, hit my first profit target, took profits, hit my second profit target, took more profits. And as it kind of, started pulling back, I'm like, okay, let's see. And at this point, I was like, really, I was like done. I'm like, fuck, I'm done for the day. I didn't like this pullback because there's a difference between this pullback. You see how small these candles are, and this pullback. Do you see what I see? Like, when we actually have a pullback, it's like usually this. When we have a retracement, it's usually this. Like, look at this, wick on the top, wick on the bottom. It's kind of want to hold. It's being a nice person to use. Like, oh yeah, no problem. Just adjusting itself. But when it pulls back that heavy, just like this, I don't like it. I jumped out of my trade. I'm like, sweet, I'm done, and I called it a day. Literally, that's it. Now here's the thing, yo. I don't mind making these 30-minute long videos. To be honest, I don't mind. But what I do hurt me is, or not hurt me, just sometimes maybe I compare myself. I see other trading channels who are not even fucking giving out any sauce have like 100,000 subscribers, and I give out so much sauce, bro, and I have like 10,000. Maybe I need to start giving out less sauce so my subscribers go up. So make sure you subscribe, because the numbers say about 80% of you are not subscribed to the channel. If you're watching, the statistics say 80% of you are not subscribed to the channel. So subscribe to the channel, throw the video a like, because it helps with the algorithm. I mean, why wouldn't you do it? Helps me, helps the algorithm if you got any value. And let me know in the comments how you enjoy this. And by the way, if you want to watch another video where you want to get the source from, there might be a video sitting on this side right here. And if you want to come work with me, hey, you want to actually come work with me so I can actually take you to the next level, there will be a link right here. Okay, I'm out. You look after yourself. Peace.